Aggregation play is a possible exit strategy that we've been considering, but aren't locking ourselves into. It's one of the reasons why if we bring a programmatic partner in, I always want to be able to have our club investors, which is how we describe our family office and high net worth investors. We want our club investors to be able to participate in everything we do. What I would not want is a situation where a programmatic equity partner wants us to hold an asset pursuing an aggregation play. And there's definitely an opportunity. Between Blackstone's REIT, Starwood's REIT, and they're putting out billions of dollars a month, you will get a premium in terms of a 25 or more basis point discount in a cap rate for a stabilized portfolio over a one-off asset, particularly in this market where it's nearly impossible for a Blackstone or a Starwood to gain a footprint. So there's definitely an aggregation play, but we need to make sure that that is something that our investor base buys into going in. And I wouldn't want the interest of one investor to seek an aggregation to influence the desires of another investor who would rather harvest that asset once we've added value. So it may end up being that we have an aggregation play on one hand, and we have an opportunity, if there's an aggregation strategy going on, that if any of the club investors wanted to depart, we could provide an exit alternative for them. And I think that if we laid that out up front, so investors knew that they had a choice to stay in on an aggregation strategy or to exit at a certain point in time, I think that might be a way to be able to accommodate both groups together without any conflicts. We don't need to rely on a portfolio exit by any means, and wouldn't frankly want to go into this strategy banking on a portfolio exit. But right now, there is a lot of capital looking for stabilized portfolios, and there is a big hole in the portfolios of those large institutional buyers like Blackstone and Starwood and others in Los Angeles, a huge hole. So we could fill that. And regardless of what our investor base is, whether it's club investors or institutional or both, that is certainly an exit alternative. There's plenty depth to the market here for stabilized assets, given their size. They're within reach of mom and pops who also want turnkey, upgraded, stabilized assets. All the deferred maintenance has been taken care of. All the RUBS is in place. The tenant bases have been optimized. And there's plenty of demand and depth for those. I think that aggregating a portfolio to an institutional buyer is always an exit alternative that's available to us.